now in accounting equation. Under finance, all assets are composed of liabilities. That is why the accounting equation is asset is equals to liabilities plus equity. Asset accounts increases when debited, while liability and equity accounts increases when credited. When asset accounts is credited, it decreases, while for liability and equity accounts, decreases when debited. Effects of transactions. Number 1, investment of the owners. January 1, 2016, owner deposited 500,000 cash to the bank under the name of his company. Asset is increased by 500,000 while liabilities no effect plus equity increased by 500,000, and then if you get the difference between asset and then equity account, 0. So that is the purpose of the accounting equation. The asset minus the liabilities and equity must be always equal to 0. It indicates that your recording of the transactions are correct, but it is not conclusive. There may be other reasons why your accounting books are not properly recorded. For number 2, purchase of supplies on account. January 2, 2016, purchase 40,000 worth of supplies on account. So, asset is increased by 40,000 while liabilities increased by 40,000 by the amount plus equity, no effect. Okay? Because the journal entry of the January 2, 2016 date of entry is purchase or supplies increases. A supplies is an asset account. It increases because it's debited. While for the credit, it also increases. The accounts payable. Accounts payable is a liability account. So, debit, supplies, credit, accounts payable. Same amount, of course, 40,000. Settlement of purchase on account. January 4, 2016, the purchase on account was paid on cash. So, asset decreased by 40,000. Cash is credited and the liabilities decreased by 40,000. The accounts payable is debited. While for equity, no effect. So, this is an example of use of asset because asset account decreases and then liability or equity account also decreases. Purchase on cash. January 6, 2016, additional purchase of supplies on cash. No effect. Why? Because it is an example of exchange of asset. In this part, an asset account, which is supplies, increases while a cash, also an asset account, decreases. When you get the difference, it is 0. Okay. That's why it has no effect on the accounting equation. Rendering service on account. January 9, 2016, the company rendered service to customers and billed them. Okay. You must know the difference between received, rendered service, and received, and bill. This transaction means that the company rendered service and then gave the receipt or the invoice of that service to the customer. That's why it said bill them 55,000 pesos. So, asset increased by 55,000. It is accounts receivable. While for liability, no effect. And then equity increased by 55,000 because of revenue, service revenue. So, the entry, accounts receivable debit, 55,000. And then, service revenue credit, 55,000. So, the effect is still 0. Asset minus the equity. Or debit minus credit, 0. Collection of account. January 10, 2016, collected the bill from the customer. No effect. Why? Because the entry is asset account, which is Accounts receivable is credited for the same amount of 55,000. Accounts receivable decreases and then cash increases because cash is debited for 55,000. The effect is 0. Rendering service on cash. January 10, 2016, rendered service on cash 10,000. Asset increased by 10,000. Liability no effect, equity 10,000. The entry is cash debited 10,000 and then service revenue credited 10,000, same amount. Receipt of utility bill, January 15, 2016, electric cooperative bill the company 90,000. Asset no effect. And then liability increased by 90,000, equity decreased by 90,000. The entry is utility expense, which is a negative effect on equity, decreases the equity, and then liability credited, utility payable by 90,000. Loans. January 17, 2016, the company decided to loan from ABC Bank 200,000. Asset increased by 200,000 and then liability increased by 200,000. This is an example of source of assets. Cash is debited by 200,000 and then loans payable is credited by 200,000. Withdrawal of owner. This is an example of use of assets. January 18, 2016, the owner withdrew 100,000 from the company. Asset is decreased by 100,000. It may be for example, the common example of withdrawal is through cash withdrawal. So, cash account decreases and then liability no effect, equity decreased by 100,000. Withdrawal or drawing of the owner is a negative effect on equity. So, total asset is 665,000. Total liabilities is 290,000. Total equity is 375,000. And if you get the sum of 290,000 and 375,000, it is equals to 665,000. So, that is the purpose of the accounting equation. Book of original entry. So, this is the general journal. There are other types of journal. Sales journal, cash receipt journal, cash disbursement journal, and then purchase journal. So, for the date, every entry must have a corresponding date. The entry must be made on such date. The purpose is for maintaining records. In practice, the information or the business transaction is compiled, consolidated, and then recorded at one date. For example, at the end of the month is the recording of the transaction. Of course, in the business transaction, there are always indicators of the dates. So, that must be matched to the date for every entry. Debit the account that corresponds to the transaction and then on the next line, add a space. For example, cash, add a space, credit, any account. Reference for this REF. That is short for reference number or folio. Input the account number of the account used on such transaction. For example, cash, account number of cash is 101, usually. So, if you debit cash, reference number aligned to that account must be the account number of the cash account. And then, DR, short for debit, and then CR, short for credit. So, here's the example. January 1, 2016, cash 101, 600,000, and then owner capital 301, 600,000. This is the account number found in the ledger or the chart of accounts. Take note that whatever amount you put in the debit side, the same amount must be written on the credit side. Total debits must equal to total credits. The difference between the two must always be 0. If there is an amount which is not 0, in getting the difference of the total credits and total debits, there is an error. The same to be applied with the accounting equation. The difference between total assets and total liabilities and the equity must be 0. So, book of final entry or the ledger. The account title and then account number. If the amount is debited in the journal, it is also debited in the ledger. The same applies to credits. When the account is credited in the journal, it is credited in the ledger. Each account title has a unique account number. The purpose is for tracing. For example, there's an error in the financial statements. For example, cash. It is found in balance sheet financial statement. If there's an error, then the first step is to go directly through the book of final entry or the ledger. Here's the example. Cash is debited by 600,000. And then owner of the owner capital, ledger 600,000. So asset 600,000 and then equity 600,000. The difference is still zero.